Let's go back to housing for a second. Why not? Because we saw the Case-Shiller home price index rise 9.3% this morning, and this increase in home prices, in theory, could be good for bank stocks. I know you're going to look at it in today's Off the Charts.
Absolutely. Home prices keep rising if you look at the Case-Shiller home price index, and our Off the Charts show that should drive bank stocks higher. Let's pull it out for you. The smooth line there is the S&P Case-Shiller Composite Index year over year. We're going to show you the jagged line of the KBW Bank Index. And there's a lot of noise in there, obviously, but there's definitely a correlation there. And KBW has found that there's a relationship, a correlation between housing prices and bank stocks, not just in the United States, but around the world as well. Now, they say if the recent improvement in U.S. home prices are maintained, it should be a good backdrop for long-term bank stock appreciation. Now, Eric, you and I covered the first quarter bank earnings season, and we talked a lot about how mortgage banking kind of turned the corner a little bit in the first quarter, especially for big lenders like Wells Fargo. Refinancings are not coming along the way they were before. That's not providing the impetus it was before. Tripping things up a little bit here, but as our last guest, Chris, was telling us of Thornburg, that Chris Thornburg, I should say, Beacon Economics,
right,
that should continue to power along for a little bit here, at least 3 years before he sees signs of a bubble emerging.
But some of the relationship between housing prices and banks has been broken since before the credit crisis, right? There was a period during which people used their houses as piggy banks.
Right.
That's not really happening any longer.
That's not
happening. There was a
happening.
period when banks had a great deal of housing inventory, which they don't have any longer. So if they had more housing inventory and home prices were to rise, maybe that in theory would improve the quality of their balance sheets.
There are a lot of artificial events going on in the housing market and with banking stocks too, with the Federal Reserve so actively involved. But one thing that KBW points out, Eric, is that the underlying collateral for loans is increasing when housing prices rise. That's all good for banks overall.
Credit
the
quality.
Population, right, is feeling better when their home prices rise. They're more confident. They increase spending. These are all fundamental. Exactly. These are all fundamental reasons to be a little bit more optimistic about banking stocks as long as home prices keep rising.